Hi there, traders. This is Brad Gilbert with the weekly kickoff. It's Monday, the 18th of March. All right, now just having a look at the charts just to start with. The dollar managed to pick itself up off the floor, and the dollar index trading around 103. You see the dollar sort of did well against pretty much everything, right? And I'll show you these numbers Friday in the US. I don't think they tell the real story of what's going on, but you know what? It's good to see some uniformity regardless. The dollar strong, everything else weak. It makes it easy to pick things off. Now, let me just go through a couple of things. Now, the talk is, that even though the Fed said they were, potentially ready to start changing rates, some of the data has been a bit mixed, right? We saw CPI an extra 0.1% up a week ago. Like the numbers on Friday, right? US New York Fed manufacturing numbers were terrible. Manufacturing output was up 0.8. Right, which was above the general range here expected. That's what gave the dollar a bit of a boost. But the revision was minus 1.1, right? So that's not like awesome by any stretch. And then you got industrial production numbers plus 0.1. The revision was minus 0.5. So the numbers, we're getting a lot of disparity between the last month's numbers and this one's, and a lot of the revisions haven't been that sort of good. University of Michigan prelim numbers, the expectations and sentiment were down, but only slightly. But when you look at the charts, right, I just want to get this out so you don't get sort of too confused. When you look at the charts, you think, well, okay, everything's looking like the dollar's going up. All the numbers are strong, but they aren't. It's like a bit of a shift in, like squaring up ahead of the weekend. Looks like the market got itself short dollars, right? And that was the play after Jerome Powell's testimony and everything else suggesting, we're ready to cut rates. It's just a bit of a reshuffle. And this is important to understand. So where things are now, that's fair value for everything that's been released. So we've got opportunities coming up. Now, what have we got this week? Well, it's absolutely a monster week, right? There's opportunities across the board here. Now, just having a look at this, right? So, because you're going to have to keep things pretty nimble, right? Are you going to get consistency across the numbers? Well, there's a chance, but there's so many different variables. We've got 4 central bank meetings. We've got loads of top tier numbers. You're just going to have to sort of work with what's going on. That dollar sentiment is in the market right now, so we can use that. But coming into Monday, you've got, you got some Chinese numbers here, which will be important for the Aussie and Kiwi. Now, Tuesday, Bank of Japan and RBA. Like everyone's expecting the Bank of Japan to do something, probably except for me. They never sort of really do anything, right? And they can't really do a lot. But anyway, there's a chance there for them to come off negative rates. Will they do it? I don't think so. RBA, we want to see more about what they're talking about. Get a bit more scope of the underbelly of the Australian economy. And then you come into like Tuesday, right? Canadian inflation numbers, very important. First round of housing numbers out of the US, okay, gives us something to sort of work with, see where that US dollar is. You come into Wednesday, we've got UK inflation numbers, obviously super important. We've got the Fed interest rate decision and press conference. That's what we want to hear about, okay? I don't see the Fed changing their tone. The numbers, as I said, haven't all been like amazing. They're just there or thereabouts. So I don't see the Fed changing their tone, but, we want to find out more about what's going on. Kiwi GDP numbers after that, that'll be pretty loose as you'd expect. Come into Thursday, we've got the Bank of England down here. You've got Aussie employment numbers, some German PMI numbers, PMI numbers out of the Eurozone and the UK as well. So there's lots of numbers coming out in amongst the key releases from the central banks. Now, no one's expected to be changing rates, right? And that's what makes this week a little bit trickier, because if there's a rate cut or a rate change on the table, it makes things easy to attack. When you've got no change of rates, we've got this statement, then you've got the ambiguous press conferences, right? So, you know what? The way the central banks have been talking and they're umming and ahhing, it makes it pretty hard to really commit to a medium-term trading opportunity, or even trade the events. Can be a little bit haphazard. The back end of Thursday, we're starting to get some housing numbers out of Canada, and there's a bunch of housing, PMI numbers, Philly Fed manufacturing index, and the jobless claims out of the US. Right? If you didn't know what was going on, we'll know a lot more by the end of this week. You come into Friday's trading, UK retail sales, IFO business numbers out of Germany, Canadian retail sales, and you got a few Fed cronies there talking as well. So, like, it's one of those weeks. This is where, you know, I could really manage the calendar and spread this out over like 2 weeks. Easy, right? It would make things easier. So, like, you just look at the Fed interest rate decision here. Like, there's solid stuff, sort of both sides of the market leading into this. Hopefully we get some clear direction or indications from the central banks what they're going to be doing. It will start with the RBA and the Bank of Japan on Tuesday. So that's really your starting point, right? So the hardest part is just keeping everything together, looking at what's happening here with the dollar momentum. Well, that's why this week looks better, because the dollar at the moment has got shape and it's the same across the board. So that should give you a bit of confidence going into the start of the week, going, okay, well, the dollar, it's starting the week on solid footing, right? And then you can come back and have a look at the general core market dynamics and see if they're in play. At the moment, you've got US equity futures up, Euro, Sterling, Aussie, Kiwi down, right? So there's no connection there. I think this week with the Fed in particular, you want to be watching the US yields, Treasury yields, right? So price is off just a touch at the moment, which means the yield's up, okay? Generally means stronger dollar, right? It doesn't match up with what's happening on the equities, but that doesn't matter, right? So just keep an eye on the yields as we go through the week. It's going to be very interesting to see how they play out. And then one other thing I failed to mention to you is just keep an eye on those longer term charts, right? Let me just get on that right screen. Sorry about that. Okay, so look at the longer term levels. Like Sterling had that big sort of break higher. It's back in the range. The rest of the instruments are within recent ranges, right? So this is the frustrating part, because we're not getting the follow through on a lot of these currencies, because we're not getting the central bank giving us the final answer. The Fed have tried, but still the dollar index is in range. Everything's sort of trading mid-range here, and we're waiting for the next big move. We need some of the data to line up. We're just not getting the US numbers to be either all strong or all weak, and that gives us these crappy markets that there's so many false starts, right? What you can be looking to do when you identify that is come back to your hourly charts, look for opportunities to tuck some cash into your account, but just be aware you're probably not going to get the run through, because the data runs into another big data release, then another and another, and it becomes really disjointed, right? The Fed, definitely the key to the week. All right, guys, that's as good as I can explain it in the shortest period of time. I'll give you more updates as we go through the week. It's going to be pretty interesting, right? With the Fed, US dollar. I think the US dollar, just to end this video, I think the dollar's overvalued right now, right? For what is happening. You know what? We've had the US non-farm payroll, CPI. We've got a couple of weeks to wait before we get back into that cycle. So it's really going to come down to the Fed and these second tier US numbers. That's what you really want to be having a close look at. All right, guys, all the best. Cheerio.